Funds with more than $100 million must file disclosures about their holdings within 45 days of the end of each quarter, providing a glimpse into the holdings of secretive money managers, including hedge funds and large family offices. These are the top 10 stocks super investors are betting big on in 2024. In this video, we're covering all of them from the smallest to the biggest, getting started with number 10, Salesforce. Right now, Salesforce is in the portfolio of 10 super investors. This is led by ValueAct Capital, who has a very concentrated portfolio and has a 28% holding in Salesforce. Of the investors who own it, 5 added and 4 trimmed in the last quarter. Salesforce is the $249 billion software giant that trades in the middle of its 52-week low and high. In the last decade, Salesforce has beat the market, though since the pandemic they've had their own fits and starts. Since the beginning of 2023 alone, the company's stock price has doubled. Salesforce has long been a growth stock, and they've grown a ton in the last decade. Since the pandemic, their earnings and cash flows are up by a lot, and the company has a net cash position. For the first time in company history, during the last 2 years, they've been buying back shares after diluting shareholders a ton before this. The numbers for Salesforce look pretty good, and the company's actually trading below some of their historical valuations. With multiples that are more reasonable in their past and growth projected in their future, today their GF value comes in at $254 per share. That's just about their current stock price. Their cash flows aren't quite as bullish, implying around a 15% downside. Analysts, though, are even more bullish with a 24% upside and a $316 price target. Next at number 9, we have Green Brick Partners. This home builder makes up 29% of David Einhorn's portfolio, and it's his biggest position by far. Einhorn's the biggest shareholder in this Texas-based builder, and it's crushed the market in the last decade, especially since the pandemic when it's up more than 10 times. Green Brick's a $3.3 billion company trading at its 52-week highs. Looking at their numbers, we can see the tremendous growth the business had. They're also super profitable compared to their past. After coming out of a big rut, at the same time they're now earning above average returns on capital. And it's hard to see here, but after huge dilution in the early 2010s, they're actually buying back a fair amount of shares in the last couple of years. This one may be harder to judge as some of these numbers are ahead of their historical valuations. Things may have gotten ahead of themselves with the GF value today coming at $48 per share. To reach that, their stock price would almost fall by half. Big bet stock number 8 is Equitable Holdings. 4 super investors own the business, and this is led by a 30% position from Greg Alexander of Conifer Management. Alexander is one of the few hedge fund managers who Warren Buffett said would trust to run his own money. He's owned the stock almost the entire time it was public, and in the last couple of quarters he's trimmed his position. Equitable went public in 2018, and from its lows during the pandemic, it's up more than 4 times. Today, it's a $14 billion financial services company trading $2 off of its 52-week high. Equitable's well-diversified, operating in asset management and retirement planning solutions. In the last few years, they've had a lot of earnings and have enjoyed soaring returns on equity. The company also pays a 2.3% dividend yield, growing this by 9.5% last year and growing these for each of the last 6 years. With strong share buybacks, they have a very high 10.5% shareholder yield today. Since going public, they bought back a ton of their shares, reducing this steadily each year. Analysts are looking for the company to trade even higher and have a $49 price target. That gives it an 18.5% upside. Apple is our next big bet, even as Warren Buffett sold half of his stake in the company. 18 super investors own Apple today, and this is led by Buffett, who still has 30% of his holdings at Berkshire Hathaway invested in the stock. Interestingly, the top 3 super investors all trimmed last quarter. This is led by far by Buffett. Apple's the largest company in the world with a $3.4 trillion market cap. Even as Buffett sold, it still traded higher, and today it's just $18 off of its all-time highs. Apple's one of the best performing stocks of all time, and in the last decade, they've absolutely crushed the market. Their numbers have been like clockwork. They're super profitable, even though recently their growth has mostly stalled out. They still earn very high returns on capital, and they're returning a ton of this to shareholders, both through share buybacks and through dividends. It's not always thought of like this, but Apple's a dividend growth stock, growing their small 0.45% dividend yield by 4% last year and 12 years in a row. As I alluded to, it's the valuations on Apple that are giving Buffett pause. These are high any way you look at it from its historical numbers. With a big run-up even after Buffett announced he was selling part of it, today their Guru Focus value comes in at $184 per share. It'll be hard for Apple to compound at the rates of its past going forward. Their cash flows support this, implying around a 23% downside and a $167 fair value. Analysts are forever bullish, seeing a rosy 18% upside from today's prices. Another Buffett stock, Occidental Petroleum, is next at big bet number 6. 4 super investors own Oxy stock right now, and this is led by the Canadian Warren Buffett, Prem Watsa, who has 32% of his stocks on his 13F invested in the company. Interestingly, Li Lu, the Chinese Warren Buffett, also bought this in the last quarter. Occidental Petroleum is the oil giant, trading just $2 above its 52-week low and for a $46 billion market cap today. The company had a rocky history, and it almost went broke following its acquisition of Anadarko Petroleum mixed with the pandemic. From those lows, it's up more than 5 times. What we've really seen in the last few years as Buffett was buying is disciplined capital allocation. This is the way to make big money in a commodity business. The company's cash flows have been used to steadily pay down their debt. What's been left over has been returned to shareholders both through share buybacks and now a dividend. Today, Occidental pays a 1.7% dividend yield, and they grew this 25% year over year. However, now their share buybacks are on pause as they're using mostly cash and some shares to acquire Crown Rock to strengthen their portfolio in the Permian Basin. Their historical price to sales puts their fair value at $63 per share. Their cash flows look like they could support a valuation even higher than this, as much as maybe $78 per share. Guru Focus, though, gives the company a fair value just under $56 per share and expects things to be relatively flat from here. Analysts are almost as bullish as their cash flows with a $72.50 price target. That's up 39% from today's stock price. The 5th big bet is Microsoft. 32 different super investors own the company, and it's the second most super investor-owned stock. This is led by, no surprise, the Bill and Melinda Gates Foundation Trust, who has 33% of their portfolio in the business. In total, 9 super investors have double-digit percentages of their portfolios invested in Microsoft. Microsoft is the second biggest company in the world, and today they're trading just $30 below their 52-week and all-time highs. Like its big tech peer Apple, it's been one of the top-performing stocks of all time, and they've crushed the market in the last decade. Though today they're trading for pretty lofty valuations at as high as 37 times earnings. Microsoft's one of the steadiest blue chip companies out there, and things have really taken off after the company stalled in the early 2010s. The pundits didn't know then that the company's best days were ahead of it. Microsoft earns a ridiculous amount of free cash flow and still earns very high returns on capital. They've also bought back a ton of shares in the last decade, but notably they've stopped their share buybacks in the last year. This is because, like Apple, Microsoft's trading way ahead of its historical valuations of the past. It's not always thought of like this, but Microsoft's actually a dividend growth stock. They've grown their dividends 19 years in a row and grew these by 10% last year. With a very high stock price, today they pay a modest 0.76% dividend yield. It seems like Microsoft's well recognized as a wonderful business, and they have a $410 fair Guru Focus value today. Analysts, though, still see the company trading higher with a price target of $493 per share. Fair Isaac Corporation, or FICO, is the 4th biggest super investor stock on our list, and it's owned by 4 super investors today. This is led by Dev Kantasaria of Valley Forge Capital Management, who I covered in a recent video on the channel. Dev has a 34% position in the company, and Linzel Train follows with a 15% holding. Fair Isaac is the standard for credit lending in the United States, and you've probably used the FICO score to secure loans. Today, the stock is worth $39 billion, and the company trades just $10 off of their 52-week high. They've more than doubled in the last year alone. There's perhaps no other big business that has had as good of a decade in the last 10 years as FICO. The company's stock price is up more than 34 times. This is because of some insane valuations where right now they trade for 100 times earnings. The company's numbers look good, no doubt about it, but they're not that good. They still have capital in their business, and they've added on a lot of debt in the last couple of years. Even still at these really high prices, management is buying back some amount of shares, and they've reduced their share count dramatically in the last decade. A GF value for the company is only around $835 per share. That's less than half of their current stock price. So this stock could come cratering back to earth. Their cash flow numbers are even rougher and don't really account for the wonderful nature of this business. These are implying a brutal 84% downside. Stock number 3 is Alpha Metallurgical Resources, which is owned by two super investors, Monish Pabrai and Guy Spear. Pabrai has 54% of his US listed holdings invested in AMR. The caveat here is this only shows around 20% of his assets under management. After buying the stock in the second quarter of 2023, he briefly cut it in the fourth quarter of that same year. Since then, he's been adding more, and he now owns the most shares that he's held throughout this period. AMR is a metallurgical coal manufacturer which is used in the production of steel. The company's stock price has more than round-tripped in the last year, and it's down 50% from its highs of $442 per share. Today, it trades just $17 above its 52-week low. AMR came back to life after nearly going bankrupt during the pandemic and trading for as low as just $2 per share. Even at today's price, that's a 100-bagger over this time, and it was a 200-bagger at its peak. The thesis here is that this is a long-lived coal asset, and the company has significantly de-levered. Now that they're free of debt, they're using their extra free cash flow and buying back shares. From its lows especially, things seem to be going well, as the company's trading below its cash flows and its gram number. Still, both metallurgical and thermal coal are cyclical industries, and today a GF value comes in at $200 per share, right around their current stock price. The second biggest super investor bet is Berkshire Hathaway Class A shares. This is led by a 63% position from Norbert Liu and a 40% holding from Francis Chu. Norbert Liu may be a modern Charlie Munger. 14 super investors own Berkshire Class A stock today. This is the one that trades for $700,000 per share. Since Buffett took over in 1965, it's the best performing stock in the market, and just earlier this year it was briefly valued at over $1 trillion. Today it's trading 5% off of that all-time high mark. With Berkshire owning so many diversified companies, it's hard to make sense of looking at their numbers holistically. Still though, we can see their sales and free cash flows go up steadily. In a big departure from its past, Berkshire's been buying back shares, especially since the pandemic. Though notably, this has mostly stopped in 2024. Part of the reason for this is that Berkshire looks like it may be overvalued based on these historical numbers. Do you know the stock that super investors are betting the biggest on in 2024? It's, drumroll please, Carvana. The online auto dealer is owned by 3 super investors, and this is a 66% position from Cliff Sosin. Rob Vinall also has 25% of his portfolio invested in the company. Carvana was a pandemic darling and traded at prices as high as $370 per share. Then the company almost went bankrupt and they traded as low as $4 per share. Today, Carvana is a $23.5 billion market cap that's trading almost at its 52-week high, though this is still down 50% from its all-time high. The big difference in the stock is that they restructured their debt and they're now profitable for the first time in company history. It's easiest to see this in their trailing 12 months worth of numbers, where they've now had positive free cash flows for the last year straight. Still, they've massively diluted shareholders over this time, issuing plenty of shares for acquisitions and for funding purposes. Though crucially, not at the exact moment when they were trading at a peak. That would have actually created value for a lot of these shareholders coming in the last year or so. Things looked pretty dire in 2022, back when the company had negative equity and negative cash flow. Even with positive cash flows today, their valuation still may be ahead of itself. Right now, their numbers only support an $86 fair value, which is 45% down from their current stock price. Analysts were super bullish on the company, but are now more tempered. They have a target price of $160 per share and just a 2% upside. Looking at their chart, it's safe to say this has been a roller coaster ride for shareholders. These 10 stocks are the top big bets owned by super investors in 2024. Which stock surprised you the most? Let me know in the comments below.